as the VC investor when you're a retail investor, right? So I'm going to be your kind of retail investor today, and we will see the approach, and we will see what kind of red flags and green flags the VC investors are taking a look at, and what can we learn from that. Yeah, and of course the community Q&A, always your questions, and we are giving away also 5 layer 1 NFTs for the best questions. So yeah, don't forget to write your questions or ask them live. And before we jump on the first topic, I just want to say thanks to the community who joined and congratulate everyone who won on our Linux Quest, and those who won the NFTs from our NFT hunt, guys. Congrats. Hope everyone had no issues with that. And if you have some issues, some technical issues, just drop it in the comments, or you can write it, you can open a ticket on Discord and our moderators will help you, because we've seen a couple of comments regarding that. So no worries, we're here to help. And let's start. The first topic, let's talk a bit about general. So how can the investors, the VC investors, are seeing the Web3 right now? We're everyone
Right.
we are talking. Yeah, Ioannis.
Yeah, I mean, let me kind of make this small intro on like the general market and how we see it. And I
With
think
pleasure.
it's nice to kind of point out from my side, and for our community to know as well, that the the current market sentiment is a bit on the low, right? It's kind of bad, and I think it's good to understand that both VCs, VC analysts, retail community, everybody kind of understands this. But I think what kind of differentiates someone that's been on the market for a long time and someone that is joining now, so the experienced versus, let's say, the normal people that are joining, is having this big perspective on the whole industry and understanding the cyclical nature of it. So, I mean, if you look at Bitcoin price, then we say that we are on a bull market. If you look at Ethereum price, it's like the same price it's been 2 3 years ago. If you see altcoins, you say that we're in a bear market. So it kind of it's the lens that you look at the market, then you might have a different opinion. But this doesn't really matter. It's more of the like what we are building, what's the grand vision, and why we are all kind of part of this industry that is called the blockchain industry, crypto industry, and it's exciting. So yeah, in general, the market sentiment is not that good, but I think we see light at the end of the tunnel the next coming months. It's been some rough months, like starting from 2025. We had this big momentum, this snowball effect that has been uh, triggered mostly by the Trump news and all this momentum that came up like to a pinnacle, and then it didn't, like, let's say, boost the market as everyone was expecting. So we see kind of a downturn that I believe personally I'm bullish for the next coming months and everything changing, because in essence the price changes, which is also the main thing that influences sentiment. But if you check the on-chain metrics, if you check the builders that are building, if you check the projects that are um, being built, everything is increasing and moving forward and moving to better things. So yeah, in general, that's my view on stuff, and I think we're just early. I think we keep on saying this. We've been saying it for years now, but I really believe that we are still early, and you can see this by things that impact the market, like Trump coin just impacted the whole market. So, and this is, for me, this is a clear indicator that we are early. When the whole industry matures, I think this kind of hiccups will not have that big of an impact on the market sentiment. So for our community, I think let's kind of keep and look at the fundamentals and keep on looking at the fundamentals, and the price will follow suit.
Thanks, Ioannis. You know, when you've said that when we're looking at different lands, like when we're seeing the price of BTC or Ethereum or altcoins, I honestly just remember the meme. You know, this trading meme when the trader is actively looking to the charts, and when he's seeing that BTC is dropping, he's like laying and crying in tears. So, like, yeah, it's not about the price, it's about the fundamentals, I believe. And you know, that's why I kind of brought this meme, because it affects the approach how retail investors, traders, yeah, and the VC investors are differ from each other, right? Like from this perspective of the retail investor, I would say the ideal retail investor. What do you guys, when you're when you're willing to support the project, when you're choosing the project and you're doing your own research, what kind of green flags or red flags are you looking at when you're doing your research, right? You're like looking to the team, or you're looking to the influencers, or you're just investing and supporting the project that you like. Yeah, though I believe that the VCs, they're having a different approach, right, Ioannis?
Yeah, right. There's a huge gap between what the retail investors see and what VCs see in different projects, and how they approach
Yeah,
Web3.
like guys, like you can debate with me, but drop in the comments what do you what do you look at when you're thinking of supporting the project, right? When you want to invest in the project and support the project in the future, like what kind of metrics do you see? Is it like making access in a week of a TGE, or it's the fundamentals, or what? I just want to know, like, your opinion. Like from my perspective, for example, when I'm researching the project I want to support, I'm looking at the backers first of all, and second is the product and the roadmap. To be honest, because I think it's my opinion. Yeah, I think that the project must, if they're asking the community to support, they must show something, right? So basically, I'll just have an example. We're saying the project of AI agents, just a random example. And when I want to support the project, I want to see what they have already. Like, is there any test net or any sort of the MVP that I can check, like to understand if the project is good or not, even on the early stages, right? What about you guys? What do you look at? And by the way, Ioannis, what's your thoughts on that? Like from the perspective of the VC analyst.
Yeah, right. So I mentioned previously that there's a huge gap between the retail investors and what VC analysts and associates and partners that VCs look at. And just to point out, I think the essential differentiation is that there's a difference between understanding. There's this huge gap because retail investors and everyone that get initially involved in Web3, you start looking at projects that are liquid. So you are looking at projects that already have a token on the market. Whereas VCs and VC analysts look at projects that are pre-TG. So you are trying to understand the actual potential of this project when it actually goes to the market. This is the big goal. And of course, everybody, I mean, both the VCs and retail investors, the goal is making money. But in the journey of making money, if you are a high tier VC, then you want to support good founders and you want to support uh, projects that will make impact, which is there's a big correlation. If you support projects that you believe will have a high impact on the whole industry and the segment that they're building, then this will of course bring you some financial returns. So I mean, in terms of VC analysts and VCs, there are some pillars that we look at, and I mean the first one we can point out is the team. The team is one essential part of a project, and let's say is one of the first things we look at as well. Like who's building this? Do they have experience? Do they have credibility? Do they actually have the ability to deliver on a tough market and not on a bull market, because on the bull market everybody promises things, everybody is feeling euphoria. You look things from a different perspective. It's the bear markets and the tough markets where actually builders build and good projects are getting, let's say, explored and founded. And this is where also VCs really try to allocate most of their money on like a situation where there isn't so many eyes looking at these projects, and they have the ability to kind of filter out the good ones. So if I am to dive a bit deeper on the team aspect, um, let's say a clear filtering is if the founders, if they are first-time founders, if they are second-time founders, and the projects that they built previously, what was their traction. And this is very essential, especially on the Web3 industry, which is a very difficult industry to navigate if you are not a Web3 native. If you are a Web2 founder that you are pivoting into Web3 and you're trying to explore this, you need to understand a lot of things. You need to understand the cyclical nature that exists with bull cycles and bear markets, and how to plan accordingly with the uh, with the stage that you are. Um, how liquidity and mindshare moves in this industry. We've seen it uh, time and time again that mindshare, people follow narratives, and this is what I mean with mindshare. Like uh, the community moves with narratives. It was memes, it was AI agents. So you need to understand how to play in this field, and how to build up your community and how to sustain your community. And when it's time to actually TGE, which is one of the toughest things, pulling a good token launch with enough liquidity, with enough marketing, having the cash to sustain the your project after. It's a lot of things that Web2 founders that are coming first time in Web3, they do not know. And it's funny thing, maybe you need experience, and maybe you need a failed project to understand the full spectrum of uh, things that you need to execute successfully to have a good launch. So yeah, if I am to nail it, the team is very important, and the experience of the team. If you are not if you haven't launched a project previously, then it's the experience that you have working in Web3 projects, in other Web3 projects, and the connections that you made out of it are very important, and are a clear indicator of how the project will do.
Thanks, Ioannis. And by the way, I have a couple of tricky questions for that. So you mentioned the team, right? Like one of the important aspects that VCs and you as the VC Analytic is looking at. But let's imagine the situation. Like we all know that the Web3 is about the anonymously and about the decentralization, right? And for example, from my experience, I met a lot of founders who didn't even want to kind of share the information about the team, right? Because they believe in the non-called names and so on and so forth, right? So how can the VCs analyze the project in this case if the team don't want to show themselves to the community and to the, I would say, to the Web3 space, basically?
Yeah, so in general, there are VCs that strictly invest in projects that uh, founders disclose their information. So that's one, let's say, big filtering. What you're saying, Hannah, is, it's very true, and it has existed in previous cycles a lot. As the whole
Mm-hmm.
industry is maturing, and we are slowly but steadily implementing some of the, let's say, more traditional things that have existed in venture investing and like startup building and everything, what has been done with fintech, let's say, a long time ago. This trend is a bit changing. So the big, let's say, the big project. There are some examples of big projects. For example, Berachain is a great example of what you are saying. Like a team that is not disclosing their names, and they're using this alias. But most of the big projects right now, and the ones that get heavily backed by VCs, I mean, there is clear information of the backgrounds of the founders. So
So VCs must understand if the team members are available to make money, basically, right? Like to get the revenue from the project and the company that they are kind of running, right? To be sure that they can kind of support the project with without any like with minimal risks, I would say, because you can never say that there are no risks. Ah, come on, there are risks
yeah,
always.
always there are risks. Yeah. So no, yes, exactly.
But just a random situation. Like I also knew some founders who didn't have a lot of, a lot of cool companies before. They were more in the Web 2 space, but they created a cool idea and they wanted to share it to the community and create the real value. I would say the app or something like the real value ecosystem. But a lot of VCs, they didn't even approach that. Like they were approaching a lot of VCs, though no one even responded. So it's a kind of experience is that important. They don't even like kind of believe in the
Of
in the
course,
people like that.
it's always a combination of stuff. You can't pinpoint a single red flag and say this is why VCs do not approach you, or this is why VCs approach you. It's always a combination of stuff, and VCs are trying to balance all these points that the project brings and see if there's a good fit for their own portfolio and if they can make money down the line. But yeah, I think experience, and from like my own experience with a lot of VCs and talking with analysts and talking with associates, experience is one of the biggest drivers, one of the biggest green flags for a project. It's a thing that if you have it, is it's there's a very clear indication that you have the experience and you can pull it off, let's say.
Mm-hmm. Thanks, Ioannis. It's really insightful. Like I thought always that, except for like from my perspective, I've never looked into the team, though I looked into the project, like the product, basically. Because I believe maybe I'm just a random believer, but I think that sometimes people with zero experience in management they can create something cool because they're really cool devs and
They can, of course they can.
yeah.
Nobody says that they cannot, but it's, I mean, if we are to kind of create a simple rule of
Uh-huh.
saying that experience opens you a lot of doors.
Yeah,
If
that's true. That's true. I cannot doubt that. And thanks, Ioannis. And by the way, I see the message from Zach. So, as a retail investor, here's the few things that he looks for. First is the team. I'm really happy that we are all aligned here. That the team is important. Market cap, founders and investors, and the token unlock schedule. And by the way, I think the second, like if we make the list of the priorities, I think we can make the list of the priorities by the end of the AMA, like by the end of our episode, so that we can summarize everything up. And aside for the team, I think that tokenomics is also one of the important things, beside of the product, of course. So tokenomics, it's one of the I would say even black bones, because if you want to, like when you're supporting the project, you're supporting it by getting the allocation of the tokens, right? And to understand if the token will survive on the market, on bull market or bear market, you have to understand how the token will perform. Am I correct, Ioannis?
Right, yes.
So what do you think about the tokenomics?
So tokenomics...
Is like vesting important? Like we have also, sorry for interrupting, we have the question from Bollywood scene, is vesting important? Again, like talking about the tokenomics. So
Yeah,
yeah, giving it.
so all of this kind of falls down the pillar of tokenomics. Is it market cap vestings, terms, and like the different fundraising rounds that the project has raised. And it's a very important pillar when it comes to the long-term viability of the project and attracting retail investors as well. So, for example, bad unlock schedules. If early investors and the team gets massive unlocks in the first few months, this is a clear selling pressure and a risk that people will be dumping initially, and you will be the exit liquidity of these early investors and team that have the unlocks. Especially the early investors have different valuations. So anyone who comes earlier has a lower valuation, and usually I mean, if you are early, you have a lower valuation, and in a way of balancing out this discount that you have in the price, it's that you get locked for longer on the project. If you see that people at seed round, they have the discount, they have the lower valuation, and they do not have that big of a difference on their unlocks, then this is a clear red flag. And this is, I mean, it showcases that the project was looking desperately for money, and they might have some, I don't know, relation with the investors, because they get unlocked and they will probably dump, because if they are 4-5x their money, they will probably sell. Then
Thanks, Jan.
there are other things to see, like high maximum supply with no clear deflationary mechanisms, so no clear mechanics inside the token model to kind of deflate the supply. So in essence, to decrease the supply somehow. This could be like staking, buybacks, burns, different mechanics that kind of regulate this supply. High initial emissions, and as I told you, like this vesting schedules that are bad for people coming after. And also there's another thing: if the vesting schedules are vague, or they're not missing, or they're missing, so the team has not exactly planned the tokenomics, uh, then this is a clear sign, a red flag for me personally, if there isn't a clear plan and strategy on how the token will be get unlocked for all the stakeholders of the project.
Thanks, Ioannis. Yeah, Nelly, we are here to hear your comment.
No, it's not a comment. The comment is, Ioannis, you're a great speaker. And even though we are talking regularly every few days, I enjoy listening to you. But I think the topic you raised, you touched about vesting is super important. And maybe you can elaborate a little bit more, especially considering that recently, during the last few months, we saw a lot of projects adjusting their tokenomics towards 100% unlock for TGE, and retail community loves it. Majority of retail investors hate long road to liquidity and want to become liquid day one. And you definitely know that the bigger TGE unlock is equal to more attractive for retail community. However, you mentioned yourself that the bigger the G unlock, the more dump pressure you can expect. So, how retail investor, first of all, guys who are listening to us, please understand this confusion. So, you want your tokens to be unlocked 100% NTG. And that's clear because you want to be able to sell as soon as you want and need. However, there is this conflict because the bigger TG unlock is the more risk the token will go down. And let's hear what Ioannis has to say about this, how to balance this from retail perspective, how to understand if the next project with 100% unlock is better or good, and how to understand this.
For sure, for sure. So I'll tell you a bit on the history and how we end up with this misalignment, right? Of retail investors seeking and demanding kind of 100% unlocker, fully liquid deals, but actually all this ending up a disaster for the price. So I think the whole thing started with uh, let's say a year ago, where most of the projects that were TGing, they were following um, the high FTV, low circulating supply model, and the whole community didn't like this because most of the price discovery was happening at the private rounds, and the money was only the VCs were making money on these deals. Then came the memes, where it was kind of an answer towards this model of high FTV, low circulating supply, when memes were 100% liquid. So we saw that a lot of the retail community and a lot of overall the whole industry was very much involved in memes, and we saw a lot of liquidity being poured into memes. And then projects started realizing that memes are so, let's say, demanded, and liquidity moves towards them. They could launch using this kind of similar, kind of a hybrid model of the two, and having a TG unlock for a public round for the retail investors. And there were some successful launches with this 100% TG, but the big difference was that these projects, they had very high communities and loyal communities, similar to what memes like the whole thing with crypto is that if you are able to build a cult like community, then this community would be able to have the buying pressure at launch to pump the price and increase the token price. But this is not the case for everyone. And I think if I am to point out like what I would see, what I would try to examine and evaluate on a project that has 100% TG unlock, is how strong is their community, and if they have this cult like community, which are token holders that we are high conviction token holders. They buy and they hold, and they are willing to hold for 10x and 20x because they believe on the grand vision. If a project has this community, then this model can work. Otherwise, is mathematically is very, very difficult to work and sustain it. And one of the big things in Web3, I think everybody realizes it here, that the best marketing you can do as a project is having a token that increases in price. And all the projects are trying to do this, but if you do not have the tokenomics model to back it up, then it's very difficult. and unfortunately, when the price dumps, it's difficult to retain your community as well. So yes,
100%, yeah. Like from the marketing perspective, like I had a different experience as a marketing manager, right? And I would say that you can market almost everything. Like you can create the best marketing for every project. Like it's true. With the marketing budget, come on, you can do anything. Though the real, I would say, the barrier, like yeah, as we call it, defense. The real barrier is when the token launch on the market. You will see the real potential of the retail investors within the community and the flippers, as we call it, right? And by the way, Ioannis, like from one of the my observations, right? When we're talking about the tokenomics, beside the token utility, when we're talking like about the tokenomics, and for example, if the community, or sorry, not the community, the team has around like more than 15 or 20% allocation, sometimes VCs, like as far as I know, they might they might take it as a red flag instead of the green flag. Is it correct or not? Because like from the perspective I've communicated with, and I've seen different economics, all the members, like all the team members, they're trying to reduce the amount of the allocation for the team to make it as a green light for the investors. Is it true or it's a myth?
yeah, it's definitely true. Usually, yeah, VCs do not like seeing the team having a big percentage of the token supply. Like around 10%. I don't know. It's not that we need to kind of define a specific percentage, but overall, the whole pie, let's say it's a pie chart of token supply, it should be balanced. It should be balanced, and there shouldn't be an over concentration of supply in one specific, let's say, aspect. Also, that for example, treasury does if there's a big marketing supply, total supply on the treasury, then that's another red flag. That's a big discussion to make about tokenomics. It's a never ending discussion on Web3. And to be honest, my own interpretation on all of this is that I don't think we have found a perfect tokenomics model. It's still a rinse and repeat process, and we have a new tokenomics model coming out with some new projects, seeing how they perform, and kind of everything adjusts to it. But in general, there needs to be a balanced percentage split of the total supply into different stakeholders, the treasury, the team, some private investors, some retail investors, marketing, etc., etc. So it's a big yes, it's one of the main things that VCs and probably I mean everybody and retail investors, I think they align on this point of seeing how the tokenomics is distributed across the stakeholders.
Yeah,
Thanks,
just
Ioannis.
dropping a couple of
Really cool.
cents from my side. It's just important for everyone who listens to us to understand that there is no golden formula. That if you have this team percentage, this airdrop percentage, this whatever else parameter, yeah, that is a perfect formula. It does not exist. And the problem is that many people in the industry, they don't understand it. Believe me, it's not only about retail investors. Many founders get confused and just copy tokenomics of each other or tokenomics of successful projects just because they believe that if they copy the same tokenomics, their project is more likely to reach success. However, tokenomics, it's about sanity and balance, right, Ioannis?
Exactly, yes.
Mm-hmm.
And I
Yeah.
mean, we've seen it time and time again. For example, airdrops, as we know them, everybody felt that it was something that was over. It didn't perform well. the airdrop mechanic of distributing tokens to community wasn't that good, and we had some bad launches, launches like Blast, for example. Then Hyperliquid came into the market. They had the airdrop model, and they performed very, very well. So I think the bottom line on everything is understanding that these models, they are bespoke for each project, and each project needs to decide, and then for us and for the retail community to understand if this model really applies with the vision, with the solution, and like the product that they are building. That's the bottom line with everything.
Yeah, you nailed it. Thanks, Nelly. Thanks, Ioannis. By the way, guys, don't forget to share this space with your friends and your network so that more people can hear it and catch the alpha and get the education on the and the opinion on the VC analysts on the market and the I would say become having the mentality, tending to have the mentality of the VC investor. Yeah, right. Like how to think as the VC investor. And by the way, I just wanted to comment on one thing. I don't know much about the Blast project, right? Like I don't know much about them, though. Regarding the hyperliquidity, hyperliquid, what's kind of interesting thing here that they had a different approach on the market. Like from my perspective, what I know, they were more concentrating on the market itself and the product itself instead of making more efforts on the marketing. Yeah, they had marketing. They did it great, though they were focusing more on the product. That's why they kind of succeed, I would say, on their perspective. So yeah, I think it's also important, isn't it? Like as the VC investor, like except for the team and the tokenomics, I believe that product is 100% important, and it might be even the top one priority. What do you think, Ioannis?
For sure. Product is what will actually matter at the end of the day, because if like you can have everything perfect, but if the product doesn't perform, then nobody will actually use it. So at the end of the day, you lose everything you have been building for. So yes, it's product is the number one thing. But I think what's an interesting perspective to have is that you have, for each project there are two products. It's the actual product that you have, and another product is the token. You can think of it as another product of the project, and you're working towards your token and you're working towards your actual project. The ideal thing, and what everybody strives to do, is to kind of blend these two into one, with different token utilities, with different models, and kind of have the one powering the other and vice versa. And this is the ideal thing, and what every founder, I think, is striving to do, and what every VC is striving to find to invest into. Because if then one goes well, the other one follows suit. Where in some cases, due to speculation as well, your token could be skyrocketing because everybody's speculating on it, but your actual product might not be earning revenues, but not be having users. So yeah, that's my 2 cents on
Can
this
we
as well.
say that the VC investors are more focused on the product side, though some of the retail investors are more focused on the token side? Can we define it like that, or am I wrong?
I would say that VCs are interested in both 50-50,
Mm-hmm.
and retail investors are mostly focused on the token.
Mm-hmm. Mm-hmm. So token is also, I understand why the token is important for the VCs.
Yes, I mean, it's the thing that actually, it's their investment, the token.
Yeah.
It's the one thing that will be liquid and they will be able to sell. So they are looking into it. Of course, there is the VCs are a big spectrum to think about. There are VCs that are, let's say, the tier one VCs that are funding big ecosystem projects. So they are having a bigger long vision, a bigger time frame for their investments. So they are mostly concentrated on building something unique and something very technical and good product. And there are also VCs that are behaving a lot like retail investors. I think this is something our community is good to understand, that most, not, I wouldn't say most, I don't want to specify the amount, but there are VCs that actually very much behave as retail investors. They do the same things, they do the same good things, the same bad things, and the only difference is their ticket sizes and the money that they have. If retail investors invest with $100, then VCs invest with 100K. But the mentality and the way they move and the way they evaluate and everything is similar. So again, that's a big discussion to have, but I think it's part of Web3 and everybody needs to understand this. There are a lot of VCs, and there are VCs that behave as retail investors, and there are VCs that behave as more institutional players that are here for the long term perspective, the long term growth.
You nailed it 100%. And you know what's also, to my mind, is important? Like, except for the things we've already discussed, I think that the go-to-market strategy, it's also one of the, I would say, it might affect the decision as the green flag or the red flag. For example, like from my perspective, I believe that when the projects are doing let's say multi-paths fundraising, I believe that it's killing the how to say the perspective of the VCs to invest in. Am I correct? Like, it's just my opinion. Like, when the founders are becoming greedy and they want to raise a lot of money from different launch pads, and creating basically the selling potential, not the buying potential, from the communities. Am I like, what do you think of my thoughts?
So yeah, just to make it more clear, the launch pads, if we are to put the project life cycle on an axis, the VC investing comes before the launch pads. So VCs would evaluate the project and the deal before any retail investors would get the chance to evaluate it, usually, because they come first. First, you get the investment from the seed round from a private investor, and then you go towards your public round where you go to the launch pads and you launch your token eventually. So it's not that a greedy lineup of launchpads influences the decision of VCs. It's mostly that a greedy lineup of launchpads would influence the decision of retail investors to invest in this project. If I am more clear, Hannah. So
Yeah, I got your point. But I mean, what do you think? Do you think that the multi-path strategy is killing the performance for the project and for the VCs? Because basically, VCs, they're investing in the project and they must check the go-to-market strategy. Am I correct? And I think they can analyze that if the project is doing different multi-pad rounds, they are creating the high selling potential, like potential high selling potential. Or am I just getting it all
no,
wrong?
in this you're completely right. I mean, a big lineup of launchpads will, I mean, numbers showcase it nowadays, that projects that had a lot of launchpads and they got greedy because they thought they could like fundraise some more money from launchpads. Eventually, they are not performing well, and this is because selling pressure comes from these launchpads. And of course, this kind of, I mean, it introduces the topic of refund policies, and mostly this launchpads had refund policies, and they have refund policies. The ones that have been launching projects this couple of a year now, let's say, roughly. So yeah, having a big lineup of launchpads is firstly very bad for the project itself, and eventually everything that's bad for the project will be bad for the token and the investors that have decided to invest to it. But yeah, I mean, I think what we need to understand is that it's bad for the project viability itself. That is the main issue that we are as AlphaMind trying to address, and I think we've seen some steps being done like from other players as well, trying to counter this, and and the feedback from founders as well, that are trying to I think they've understood the problems that arise from such a plan of having a lot of launchpads.
Yeah, it's like a circle. Like honestly, it's like a circle. Like just imagine the project is building. They are getting the investment from the retail community. They are getting the investment from the VCs, and it means that the retail investors and the VCs, they're becoming kind of a part of the project. Because basically, on the support of the investments, they're building the project to make it bigger. And when they're like from again my opinion, my perspective, and when they're creating like we're talking about the loyal community, right, the loyal retailers who are holding and believing in the future of the project, and when they're creating this multi-pod strategy, they're going to the market, they're selling their tokens, and then like they're creating the selling capacity, and the token price drops down to the bottom, and then no one is getting the bright future. I would say it's like a circle when each of the parts are important. Am I correct, Ioannis?
Yes, exactly. It's a flywheel
And
circle of like of uh, starting with a bad thing and then escalating. So yeah,
100%. Yeah, and when we're talking about refund policies, it's a pain in my ass. Honestly, like I don't understand. Like from some perspective, I do understand the refund policies, though I don't think that it's 100% must thing that launchpads must have. Like imagine the situation that. We all understand that investments are a risky thing. Like we all know that you cannot, like you cannot guarantee that there wouldn't be any risks. Am I right?
yes, exactly. I think
Yeah, and the refund.
everyone investing, especially in crypto, knows that you're investing in a risky asset class in general. Let's call it. So it's a bit
Yeah, exactly.
counterintuitive, but yeah.
And refund policies is something. It. I think it was in the beginning the cool idea. Then they just. They just made it inside out, and right now it's killing the projects. And basically if it kills the project, it kills your support as the retail and the VC investors, because it's so weird. Like anyway, it's a long story short. I wouldn't say that we can make the refund story long story short, right? It's a big story. And yeah, moving to the next point, like from uh, Zach. I think Zach mentioned that one of the important things are also the market cap. I believe it's more related to the tokenomics, right, Ioannis?
Yes.
Yeah, we can also think about the next point from my list, I would say, is the narrative, basically, and the market sentiment. Because in the beginning of our conversation, you mentioned that in the bull market, it's easy. It's easy to create the project and I would say give the insights to the community, get the VC fundraise, right? Because like on the bull market, it's easy as a pie. Though on the bear market or semi-bull market, as we call it, it's kind of hard to do that, and it shows the real potential of the project, isn't it?
Yes.
So, like, my question here is how market trends and narrative are important in the case of the I would say VC investment. Basically, we all know that the VCs, they're having their portfolios, right? The projects they're investing in. And for example, if they do have a couple of verticals in their portfolio, they might not be interested in investing in such a project. Like, let's imagine, I don't know, let's say the launch pads, for example. Like easy example, launch pads. The narrative for launch pads was in when, like 2017, something like that.
I would say 20 on the previous cycle. It was 2021 and
Yeah.
2017.
So
Yeah.
So like 2021, yeah. So the VCs, they had some, they invested in some launch pads and they're kind of got it into their portfolio. And right now, if we go, I don't know, the new launch pad arrives and he wants to fundraise from the VCs, I don't believe that like it's, I cannot say that it's 100% sure that no one is going to invest. Nah, it's bullshit. Though it's kind of minimizing the investment potential because they do have already other launch pads in their portfolio. Or am I like wrong? You can debate with me. I'm not
So
biting.
yeah, no, I'm trying to kind of formulate my thoughts. So what you're saying, there are some cases for VCs where um, if they have invested into similar verticals or similar projects, then they don't want to get involved. But the case usually with VCs, and I'm talking about the good VCs, is that they formulate their own thesis of how they see the market moving in the next 2 to 3 years, and they invest accordingly. So if we take, for example, the trend on private investments for the last 2 years, we've seen a lot of uh, big investments from big VCs into infrastructure plays. And this is because infrastructure, this could be blockchain networks like layer ones or layer twos or up chains, layer threes. There were It's something that a lot of people are talking about. Same thing with infrastructure on interoperability, for example. Problems that we are trying to solve, because one of the main things that have one of the main problems that have risen the recent years in the blockchain space is that we've seen this fragmentation of uh, of liquidity and of communities being siloed into specific blockchains. And after this reason, then the builders started saying, "Wow, what's the solution into this?" The solution would be finding an infrastructure that could merge this into one, so you wouldn't need to be able you wouldn't know if you are transacting into I don't know, Solana or Base or Ethereum mainnet itself, but you would be part of the blockchain ecosystem as a whole. And there are a lot of solutions being built on this. So it's like the idea is having this thesis of, you see where the whole industry is moving and investing into specific projects that are they act as puzzle pieces into your thesis towards where you think we go. And I mean, ideally, what you want to do is you want to invest in projects that have the potential, with all the things that we've mentioned previously, as judging, as the pillars that we judge, being a winner on all these segments, let's say, that you have. Like, yeah, I don't know, in interoperability solutions, you could have someone on
Mhm.
DeFi, you could, like money markets, for example, like uh, investing on a similar solution to Aave, or someone that invested in Aave and now it's clearly the winner on this front. So it's choosing to invest wisely on things that would eventually become the winners or one of the winners.
Thanks, Ioannis. You really nailed it. And by the way, I have a couple of questions from the community, if you don't mind me jumping on that. So we have one from Bollywood scene. As you said earlier, the team should have some knowledge in Web 2, Web 3 market to perform a successful TG because it's the great step. Does your team had launched a token in this field?
So has my so what's the can you repeat the question, please?
Does your team had launched a token in this field? I believe it's a question related to AlphaMind, right, Bollywood scene, or
Probably, yeah, if our team has experience. I mean, our team being originated from InMind, where we are our own deal origination platform or accelerator, I mean, we haven't launched ourselves, but we've been involved with a lot of projects that actually launched tokens. So we had first-hand experience on like the problems that these founders had encountered, what were their solutions, how they tackled them, what steps they did from start to finish to actually TG. So our involvement is very much the next in line to. We're not the ones launching the tokens, but we are the ones advising and helping and providing like our network to help them do a successful TG. So in this
yeah.
matter, yeah, we're very much, I think, experienced in this front.
And to put my 2 cents here, like 2 coins here, I would say that the founders of AlphaMind, basically Nanli and our co-founders, they're having more than 7 years experience in startups and VC fundraising because we are powered by InMind. InMind is the one of the biggest companies that are helping startups and the projects fundraising basically, and they are on the early stages, yeah, and they're having more than seven, like we are having basically more than 7 years experience in that, and we're baked by in mind. So I would say, yeah, we kind of have experience. We didn't launch it yet. We're about to launch our token, like our mind token, though we have learned the mistakes the other projects did, and we are finding our own way to make it a great launch, I would say. Thanks, Bollywood Scenes, and thanks, Ioannis, for your answer. Like, you nailed it. You're so cool. Like, it's so cool to have you here. Like, come to our spaces more often. And yeah, we have also one question from Zach. So, how to identify rec pool projects and what precautions retails should take care of while investing in new projects?
So how to identify rug pulls? That's a nice question. Actually, it's one of our own priorities. Like all the projects that we are bringing, firstly at AlphaMind, we are certain that they're not rug pulls. And how do we? I mean, to be fair, if a project is rag pull, you could sense it that it's a rag pull. Now, if it's a very good rag pull, a very good scam, um, I think the ways of identifying it is seeing the experience, seeing the team, see how experienced they are, if they've done something similar in the past. I mean, if they are at all related with any rag pull or scams previously, then I think that's what we need to kind of reject them. But checking the team background, checking their product. Usually, if something is on testnet or on mainnet, and they say that they have, let's say, 1 million users, it's if you check it on chain, you can see how many users are actually part of the project. But of course, so if the founders are lying, let's say, but I mean, also the socials, you can check the socials and see if it's a rag, seeing the community that's involved, if everything is bots uh, and scammy accounts on Twitter, for example, then that's an indication that it might be possibly a scam. But yeah, I mean, in general, this is what we try to do. Of course, we have the chance of talking with the team. Maybe a retail investor, it's not an easy step to talk directly with a team member. So this is our main way of filtering out. But for a retail investor, is in general having a good look at the project pages, the team's background, and their socials. And if they get the sense or indication that it might be scammy or there might be some scam being done, I think that's your thing, and I wouldn't invest my money on this project. Also,
Thanks, Jan.
I think Telegram is a good way of evaluating a project, seeing how they respond to their Telegram group chat, how they respond with the other community members.
Thanks. It's really insightful point because sometimes even it's hard to understand if the project is right pool or not, like from marketing perspective. Yeah, like I just want to give some lights on the marketing perspective. For example, sometimes some projects are doing too good. They're kind of hiding that they're a scam project, they're correct pool. They're doing great on the marketing perspective, though the product is not really understandable, and the utilities of the product is not like the utility even of the token is not understandable. So also, like my piece of observation, that when you are checking the token utility and you're seeing something really not understandable, like I don't know, except for voting rights, there is nothing valuable. Don't even like my piece of advice, don't even think of that project, because sometimes it's important to have the real utilities, like at least staking, at least some voting rights. We've already discussed that on the previous brick by brick episode, though some real value utilities for the token. And what's fun thing also here, like we've talked on this perspective from, let's say, the projects who didn't list yet. But also when you want to invest in the project, again, it's like always do your own research. It's just my opinion and my piece of observation, like my observations. Though when you are supporting the projects who've already, let's say, listed the token, you can see within the blockchain scans the amount of the tokens and the holders, because sometimes, like I've seen the situation that 80% of the token allocation were held by one wallet. And for me it was a huge red flag. What do you think, Ioannis?
Yeah. That's especially with some memes that you can check a wallet having most of the token supply. Yeah, that's a clear. You are right, Hannah. I missed it. Good that you mentioned it. It's a clear indicator that it's a rug pull.
Yeah, guys. And I think I've seen one more question. Let me just scroll it down through your comments, guys. Thanks for being with us and being so active. So, Burnsy boy, how big does AlphaMind want to be? Like, I'll take this one if you don't mind, Ioannis. From our perspective, we want to be the first launch pad on the market. Like, of course, that's the core dream and core goal, I would say, right? And of course, we are relying on our community, and we want to have the real smart investors and smart community in AlphaMind. That's why we would love to see you so often, and we would love to share as much as we can with you, because we know that our community is smart and our community is doing the best. Yeah, one more question from Suleiman. Minimum team members, do you think projects have to be successful? Ioannis, that's for you, I guess.
Yes. Again, I don't think telling you a number really matters. I don't think that's the idea that I wanna kind of push forward to you guys today. There are projects that can be built with 2, 3 team members. there are projects, it very much depends also on the stage that the project is. If there is a project that has raised 3-4 rounds, you would expect that there would be, let's say, more on the bigger side of a team. So there will be some hiring being done. But usually, I think I don't like, to be honest, seeing projects with only one founder. I prefer projects that have two or three co-founders, individuals that can allocate different responsibilities to each other. So maybe a co-founder is the technical guy, the CTO responsible for the technical architecture of the project. The other one is responsible for the operational stuff and maybe for the fundraising stuff, and the other is more on BD and marketing. And based on this, they can expand their team with specific people that they need under these three, let's say, categories. But yeah, I think that's the general my let's say thinking on how I see teams. But with all of this, it doesn't mean that having, let's say, one co-founder and three team members saying that it's bad. But for me, I would like to see something more of the thing that I described.
Yeah, I totally agree with you. Like, for example, if we are saying that the project is on the pre-seed round, having like 2, 3, or 4 team members is fine. Even like one, because he's building, like, let's say the tech guy, yeah, for example. But if we're talking about the pre-TG or, I don't know, some late stages, and we're having in the team like 2 members, it's a red flag for me, because when people are building the project, they need the capacity of the team, basically, right, to create some features, to work on the development or anything. Yeah, at least for the BD and marketing. Like, I would say that in big companies, the marketing department might be even like 40 people, right, or even more. And I'm not even talking about the other departments. So it's important to understand the stage 100% sure, like 100%, and to understand the experience of the team. Thanks, Ioannis. You nailed it. And
you.
I think we need to ramp up soon. So I would love to summarize and make the list. Remember that I mentioned almost in the beginning of our conversation, to make the list of the important things that retail investors must consider on the priorities to think as the VCs investors. So, Ioannis, I'm giving you the mic, and we just mentioned how many of them, like the team, the tokenomics, the product, the market sentiment, and the go-to-market strategy, like 5 of them. So what do you think is most important here?
Okay, I think I would put team, product, go-to-market. That's 3. And then there is actually there's tokenomics. You know, that's difficult to kind of put it on a on a ranking.
Yeah, I know. It's a tricky question.
Okay, I would say team, product, tokenomics, go to market, market sentiment.
So team, product, tokenomics, go-to-market strategy,
yes,
and the market sentiment and narrative. Thanks, Ioannis. You nailed it. So yeah, guys, if you have another thoughts in your mind, you can drop that in the comments and we can check it out and see, seeing your perspective. Probably you're the next VC analyst or the next VC investor. We never know. But before we ramp up, Ioannis, I have a random question for you. So right now, I'm working on some new interesting alpha for our community. And I would love to know your opinion as the VC analyst. What type of the assets are you, I would say, not holding, though supporting? Like what type of the verticals of the projects you are supporting? Like what's in your portfolio?
Yeah, so for me personally, I am a big fan of DeFi, and
Mm-hmm.
it's one of the verticals that I have most exposure myself as an investor. I think DeFi is the one segment that has shown strong. How can I say it? It has. I mean, it has been here for a while. It has
Mm-hmm.
showed very strong signs through bear and bull markets. It's something that it is one of the segments that has the clearest product market fit that we've seen on the blockchain industry. I don't think there is
Mm-hmm.
any other segment that compares to DeFi. It is
Mm-hmm.
it is a segment that has started more technical and more niche, and I think as account abstraction, as chain abstraction, as all this UI UX getting abstracted for the normal user, I think more and more people will start getting involved in DeFi. This could be
Mm-hmm.
swapping, this could be money markets, lending and borrowing assets. This could be kind of anything. But I'm very much myself a believer of DeFi. And you know what? Because also most of people that join crypto is they join it for trading. Trading also
Mm-hmm.
falls under the DeFi umbrella. So I think down the line in a couple of years we will see a transition of people moving from sexes towards dexes. So from using sexes as a way of buying crypto, transacting like trading crypto and holding crypto, we will see them going down the on-chain route and doing all these operations on-chain on DeFi.
Mm-hmm. And do you hold any other verticals or only DeFi in your portfolio?
Uh, I mean, I hold Ethereum as well. I I know that it hasn't been performing quite well, um, and that's displeasure for the whole industry. I think there has been a lot of talk around Ethereum and the Ethereum Foundation and where they're moving and all of this. But I am a strong believer of the EVM ecosystem as being a home for innovation. So
Gotcha.
yeah, so in general, that's my, let's say that's my alpha as
Okay,
Ioannis.
thank you. So DeFi and Ethereum. Good. I wrote it down. I wrote it down. So yeah, guys, something is cooking. Something big is cooking. You will see soon. No more updates from me. Like I just shut my mouth, and you will see everything within the announcement and the community. So yeah, I think it's time to ramp up. Thanks a lot for everyone who was here, and thanks, like a big thanks and big shout out to Ioannis. Please come more often. I think we really need you here. Like you as the VC analyst, you can give a lot of alpha from your day-to-day operations, and you can like teach us how to invest smart. Yeah, right. And yeah, thanks for being with us today. Like you are the great, you are our superstar. Thanks,
Th-
legend. And let's also give some shout outs to Nelly. Unfortunately, she left our conversation because she had to drop on another call. Though let's just give some hearts to Nelly and to Ioannis for being here today. Yeah, guys, give us some love. Thanks. Yeah,
Thank you, Hannah.
drop your
Thank
questions.
you a lot for having me. And yeah, man, I'm happy to kind of join. Yeah, join on another one episode.
With pleasure. We'll invite you as much as we can. Thanks, guys, for being with us. Thank you for your comments. Thank you for your questions. We will drop the list of the winners, I think, by the end of today or tomorrow, because we need to also give some time for the other community who didn't have time, unfortunately, to join on live session, though they still have time to check the recorded space and also drop some questions. So yeah, I think by tomorrow we will have the list of the winners and the NFTs will be airdropped to your wallets if you've already won before. And yeah, thanks for being with us today. Thanks for your comments. Thanks for your questions. And see you soon. LFG, guys.
Thank you, guys.